Welcome back, guys. Welcome to the new trading session, video. This will be a big video, but just only one. We're talking about price action. As usual, I want to give you a premise. Which is very important. Price action is not the correct way to trade. Okay? I repeat, price action is not a correct way to trade. Why? Because it is not scientifically valid, no more, maybe 30-20 years ago. It's not scientifically valid always. It's not always scientifically valid, because what he tells us to do does not lead us to make money automatically. It cannot be worth the strategy alone. Trading based on the shape, on the color of the candles automatically means sweeping, blowing out our account within days. I believe in price action at the same time as a technical and graphic analysis. As for indicators, I use candles only to confirm what I think can happen within the market. Second thing, I will not show you all the combinations that candles can make, because I really don't know most of them. There are dozens, maybe hundreds. I really don't know. I will show you only the ones I know, the ones that I use, the ones that help me every day to enter the trade. So the ones you already you need for my strategy. Last consideration, we have already talked about it so many times, but I must repeat, because in price action it is very important. Just because if you don't mind this, if you don't care this consideration, it will be lethal. And basically, I'm talking about the time frame. So the price action is what is it? Price action is the graphic study of the movement of the price. The motion graph is obviously much more sensitive in the lower time frames. What do I mean with higher and lower time frame? The higher time frame are the 4-hour, the daily, the weekly, and the monthly. The rest is lower time frame. I don't use 30 minutes. I use 15 minutes. I use 5 minutes and 1 minute just for the entry. But as you know, all my strategy are based on 4-hour time frame. Okay, so I said before, motion graph is much more sensitive in the lower time frame. It therefore happens very often that what seem evident figures typical of the price action study, they all are market manipulation in the lower time frame. often deriving from news, or therefore having nothing to do with what we are talking about, nothing to do with price action itself. These are just noises often used precisely to hit stop losses. For those, for the people, for the traders who make price action the only way to earn. But this is not the case. Let me show you just a quick example, very recent example that happened just yesterday. We go on 5 minutes time frame, and as you can see, this is a very big movement of the price. We are here on the S&P index, and if I remember, this is a news because of something linked about the coronavirus. Okay, it doesn't matter. But as you can see, in the 5 minute time frame is something that really changed. Okay, the way we think about trading today, or in this day. Okay. But how does this movement, how is this movement in 4 hour time frame, as this one? Okay, which is a good movement yet. Okay, but if you see on the larger time frame, on 4 hour time frame, on daily time frame, just something will always happen, as you can see. Okay, so what looks like a huge price movement in the small time frames, it actually is a very normal oscillation you've seen in 4 hour time frame or in daily. So the Doji, here you can find so many examples, but there are so many times in which you can easily find a Doji in every time frame. This one is a Doji. All of these are Dojis. Let me show you. This is a Doji. This as well. These are Doji as well. This one. Okay, so as you can see, so many times. This is no problem. It's not a Doji, but something like that. Okay, so this one. Okay, as you can see, you have so many examples. And what does a Doji means? It means, if you see it in a lower time frame, you see price opening, goes up, then goes down, and then close more or less at the same price level of the opening. Okay, so this is very simple. A very simple graph, but anyway, it means that the power, the strength of the buyers are more or less the same of the sellers. So you can easily understand that the Doji means that there is some uncertainty in the market. I mean, nothing is sure. There is something that is about to happen, maybe to change. Okay, there is an opposing force that is pushing. Okay, as you can see, for example, here. Okay, this is a good one. Let me zoom. This is an opposing force that is pushing, because we have here an uptrend. Okay, maybe here we have a channel. Oh, okay, and then we have a doji. Okay, often the doji is in fact at the end of the trend. Most of the times the doji is an anticipation of what the market, what the price is doing. Maybe is something that is changed. Okay, it's gonna to change. In fact, a lot of times we can see a doji at the end of the swing trend. Okay, or maybe sometimes, most of the times as well, it is a continuation. It is a continuation signal, which means that the last obstacle, we can see that the price is being overcome. So the price can continue to do what it was doing. Let me show you an example. This one. Okay, so this is an engulfing. We're going to speak here. We'll to speak about them later. And this is a pin bar. We have here a doji. So what does it mean? It means that here the downtrend is started. Okay, and immediately price is going to meet a strength of the buyers. Okay, from the down, but it's not enough, because the seller are much more stronger, and so the price keep on going down. Okay, so a doji, when you see a doji, you have to just wonder, okay, if we are in a good area, in a good zone, by which something is going to change. Okay, in fact, most of the times doji, you can find the doji in the structure zone. Okay, let me show you an example, or at the beginning of an impulse. Okay, let me show you here, for example. Okay, I don't know if it is exactly a doji, but as you can see, the strength, okay, the strength of the buyers are the same, is the same of that of the sellers. Okay, so here the market, you cannot understand what market want to do now. Okay, but you know that something is change, is going to change. Okay, in fact, the downtrend is starting from here. Okay, look at this one, for example. Same thing. Okay, here, as you can see, the body is just a little bit beyond the shadow. Okay, the shadow here is very, very big. This is meaning that maybe the sellers are stronger than the buyers. Okay, so the next candle could be a red one. Okay, so the trend is going to change. So this is just a little bit swing, just a little bit a correction, okay, of the main trend that remains downtrend. Okay, and as you can see, so let me remove everything, don't want to make a mess. Let me show you. Yes, as you can see, this is not so much here. Price reacted very good here, and this is a structure. Okay, this is a structure. Okay, price react very good here, here, and here as well. Three times. Three areas from which price reacted very, very good. Okay, all these areas are generated by Doji, or better, you can easily find with a Doji. Okay, so the Doji is a very good price action signal, by which you can easily find structure, okay, from which price could react, or if you find the Doji inside a structure area itself, you can easily think that price is going to change the trend. Okay, let me show you more examples about Doji. This one. Okay, the strengths of the buyers are the same as sellers, so something is going to be changed, and maybe this is a good structure area. Not so much, but something here. Price reacted, and here it's a fake breakdown, but it's not so fake because price then reacted, then goes up. This is a very good one here. Okay, this is a pin bar. We're going to speak now about pin bar. Okay, but the concept is more or less the same. Okay, we have to think about we don't have to think about the shape of the candles. We have to think about why the market made this shape, the camp of the candle. Okay, and the reason are almost always the same. Let me show you another example. I want to find a Doji that doesn't help us, because there are so many doji unusual, okay, like this one, or this one, okay, look here, so many doji, okay. These are all doji that confirms the trend, okay. But what does it mean? It means that in this case there are sellers that want for the price to change the trend, okay, but they are not able to, okay. This is a good doji from which price created a structure that we can easily use for the future. In fact, price reacted very good here. Okay, now let's talk about Pinbars. Will be very fast, because I know there are so many contents on the internet, a lot of setups, a lot of patterns, a lot of trading strategy, Pinbar based, but I really don't care, and I really don't believe in Pinbar. I just want to say to you what for me and for my strategy is important regarding Pinbars. First of all, the only Pinbar, the only valid Pinbar I consider is the one with the shadow larger, very larger, at least triple, than the body, okay, like this one, okay. Second, I consider valid a Pinbar which is made in a key area, like for example a support, as in this case, or a structure, as maybe in this case, I don't know, maybe not, but if you see, this is a very good area, okay. So I'm pretty much sure that there were a lot of traders that maybe here they opened a long position, okay. So as you can see in this example, this is what the first Pinbar I saw. Even if the shadow was good, the zone was good because it was created on the support. It is not good for the trading, okay. And maybe this is a stop loss, okay. That's why Pinbar for me is not so relevant. But if contextualized within a structured reasoning or stricted rules strategy, even Pinbars can give us some interesting entries, okay. Like this example, these are all Pinbars on a trend line, okay. Maybe this is not so there's not all of them Pinbars. This is a very good Pinbar. Let me delete and okay, but the concept is the same. Use price action setups, candles setups, only within a key area, only within a resistance, a support. Okay, even if otherwise, they have no power, they have no strength for your trading. The last price action setups I want to show you is the inside bar, or better, are inside and outside bar. Okay, and here we have two perfect examples, always in our S&P index. This is inside bar, and this is outside bar, or engulfing, are the same. Okay, so inside, as you can see, the high and the low of an inside bar, okay, is completely covered by the preceding bar, high, low. Okay, the preceding bar is also called the mother bar. Okay, so as you can see, here, the high of the mother bar is higher, and the low is lower. Okay, vice versa for the outside bar. So the high is higher of the preceding bar, and the low is lower. Okay, they both indicate a trend changing. Okay, obviously always the same advice, always the same rule that I really recommend to you to follow. Inside and outside bar are just a little bit rare, as no, so you cannot see very often, like a Pinbar or Doji. Okay, and maybe just for this reason, maybe they are a little bit more profitable. Okay, there are less fake signals on this kind of candles, but it doesn't matter. Just take advantage of them only if the candles are made in a structure, in a key area, or in this case in the demand zone. Okay, this is maybe a double bottom. Okay, so be very careful about this.